Hey guys, welcome back to Be Rich. Before we get into the video, I wanted to bring to your notice that my uncles Vinod Srinivasan, Anand Srinivasan and I have rolled out our Substack, which is basically a blog / newsletter where we're going to post our original research onto it. And we've analyzed macroeconomic trends. And a lot of you know my uncle Anand Srinivasan and I regularly write for The Hindu, and these articles are also going to be made available for you in the Substack. The link is moatinvesting.substack.com. You'll find it in the description and in the video right now. We hope you go check it out. We've put a lot of time and effort into it. And please give us comments and feedback on what you read. Thank you. Hey guys, welcome back to Be Rich. Today we're going to be talking about the relationship between gold and interest rates. And by interest rates, I mean the dollar, of course. And what has been the historical relationship between them? Where can it go further? What has happened over the past year? Because something interesting has happened over the past year. So let's open up with what the traditional knowledge of gold and interest rates in the dollar tells us. Gold, of course, is measured in terms of the dollar. And if the dollar gets stronger, then the price of gold comes down in terms of the dollar. And the dollar gets weaker, then the price of gold goes up. So why is this so? Well, it's because when interest rates are raised, then you basically see that the dollar becomes stronger because the treasury yield is now offering more of a return on the treasury. So investors flock into the US. And when they flock into the US, there's a greater demand for the dollar. And when there's a greater demand for the dollar strengthens. And gold prices come down because gold can be traded amongst country borders. So you can buy gold for cheaper abroad. It gets cheaper, imports get cheaper. And gold at home also gets cheaper because now that the dollar is doing well, people might be willing to park more money into the treasury rather than hold it in gold. So these factors basically make gold and the dollar inverted in their relationship. So they have an inverse relationship. When one becomes stronger, the other becomes weaker. The other becomes stronger, this one becomes weaker. So this is the relationship. And there is a certain point when the structural relationship may break. And this may break during times of financial panic. So when there are financial panics, like let's say the global financial crisis or the correction of 2018 or even the 2020 COVID crisis, gold ends up spiking because people fly to gold as for safety. And the interesting thing is even the dollar is a currency which is seen as a safe currency. So it really depends on which effect is stronger. But generally, as people flock to gold and people flock to dollar, as the dollar appreciates, gold will also probably appreciate. Maybe if the dollar appreciates quite a lot, then gold appreciates relatively lesser than the dollar. But all things being said, they can possibly move together during financial crises. So the two have actually risen together for a lot of this year. And that's very interesting because they generally tend to have an inverse relationship, as we said before. Gold and the dollar have risen together. And the reason why they rose together maybe did not have anything to do with their relationship per se, but to do with other external circumstances which have been going on. So the thing is, over the past 2 years, the interest rate in the US had been at record highs, which had not been seen in a long time. And these record highs basically meant that people were flocking to the US to buy these treasuries because everyone wants a piece of the dollar. And when they're getting such a good return on the dollar, they were happy to hold on to the treasuries, given that the dollar is the reserve currency of the world. And at the same time, China has been picking up gold from the market. Chinese investors and the Chinese central bank has been stocking up on gold. And that had meant that the price of gold had also gone up. So the dollar strengthened and the price of gold had gone up. So there was this mix of geopolitical issues along with, your macroeconomic trends, which basically meant that both the assets, the dollar, as well as gold rose together. And the thing is, it's not certain that whether this will continue to happen in the future because entirely depends on what set of circumstances dominate the next few years. In the past, the dominating factor was that China was mistrustful of the US, which may continue being a factor, and China may continue stockpiling on gold. And when they do stockpile on gold, it basically means that they're trying to break away from the dollar, and they're trying to build a hedge against the dollar. So maybe some might argue that in the future, we may end up seeing China doing quite well. And especially when inflation rears its head, gold tends to be a decent asset to stay in for the long term, of course, like we mentioned in our previous video. Because when inflation is there, that means that the real return on your treasuries goes down. And if the real return on your treasury goes down, people are more willing to experiment with other assets to preserve their purchasing power. So, this being said, at least for the upcoming future, when inflation seems to be something which is going to be a reality in most countries, especially because the downward pressure on prices from supply side, like for example China, is not something we are going to have in the future, at least in the way we had it in the past, because of protectionism. It's going to be an okay bet to make that gold is going to do decently well in the future. What do you think about this?
Gold will do decently well in the future for a simple reason. The Fed looks like it's trying to cut interest rates. That means the dollar will become weaker, and that will trend people going back to gold. China is consuming gold at the rate it's consuming. So I think it will continue consuming the gold at this rate because there's no change geopolitically in anything. So as things stand, I think gold prices, like what you're seeing, them walking in lockstep, will break, where you'll see dollar going back to the old relationship, where it's inversed in relationship, where gold will start ticking north, while dollar starts going south. Until there is something fundamentally in a macroeconomic level that changes. What could only change is if China, even if China stops buying gold, gold prices will go up because simple reason of the inverse relationship with the dollar. What can create dollar to become weaker and gold prices to fall is if China and US suddenly become thick friends and Chinese central bank says, okay, we don't need to hold on to all this gold, let's get rid of it. We'd rather hold on to dollars, and starts throwing gold back into the market. I don't see that happening for any reason. Even if China and US become friends tomorrow, there's not going to be a U-turn in the policy of holding gold for the central bank in China. Because they need it for domestic consumption, one, and two, their economic conditions, domestically speaking, hasn't fared well and hasn't changed. The headwinds for them haven't changed domestically for them to think otherwise for the central bank in China to do anything. If anything, they'll want to hold on to the gold themselves to feel a sense of safety and security. And the way things are panning out in the Middle East and in Russia and Ukraine, where it's getting more and more ugly, we do not know where it's going to go finally. And it's been going on almost for 3 to 4 years now, all this uncertainty. And looking at it, it's continuing. Because the people who are on the decision table don't seem to be tired of it. They don't seem to be wanting to give any quarter. So the stalemate will continue running for some time. Until and unless there's some change in the leadership, the people sitting around the table talk differently. I don't see that happening anytime soon.
Yeah, I agree with you. And another factor which probably is a tailwind for gold is that, we just have a lot of uncertainty in the future. And uncertainty is always something which gold as an asset likes. Well, of course, gold doesn't like anything. It's an asset. But what I mean to say is that the price of gold, if gold were an asset which had consciousness and wanted its price to go up, then it would care about having uncertainty around. Because when there is uncertainty around, you tend to see people flying to gold. And when people go and invest in gold during uncertainty, the price ends up going up. This is also because when there's uncertainty, yes, the dollar is also a flight to safety from risk. However, given that Chinese investors don't have access to the dollar per se, because of course, China restricts external investment and how much of it you can make, and even if you can invest abroad. And when you have such circumstances, gold does end up being one of the avenues of investment which any investor can get into to sort of hedge against uncertainty. And when you have these multiple factors, declining interest rate, maybe not to the level we saw before, but declining at least now nonetheless, then you have the fact that inflation is probably going to be here or a little more than what it already is at. And then you also have another factor, which is uncertainty. When you have all these factors mixed in together, I think that the stew which we get out of it is quite good for gold. So that being said, this video is not a recommendation to go out and immediately start purchasing kilograms of gold. It's just an educational video to basically talk about certain factors which make something seem worthwhile and is said to have a
But interesting fact. Now the value of gold has come to the point where one bar of gold is $1 million.
seriously?
Yeah.
Wow.
You see those bars of gold, right?
Yeah.
Each one is $1 million.
Ingot.
Now. Yeah.
Yeah.
Is $1 million.
Wow.
That's how much price has gone up to.
Wow. I mean, that's crazy.
Phenomenal.
Yeah. So if you had one of those bars, you'd be a millionaire.
Yeah.
Wow.
You can imagine Tirupati Balaji is very happy.
Yeah.
His crown itself is millionaire. Anyway, jokes aside, we're not recommending that you buy gold. Gold is not an investment class. If you're trying to build long-term wealth, gold is not going to be what's going to take you there. What's the only way to create wealth and to create financial freedom, which is much sought after, is to invest in stocks of value and in companies of value. And those are far from gold and far from all this macroeconomic things we're talking about. So stay the course, look for value, look for where you think the news and the markets are, and in that news and market, where you think markets are moving, try and see value in companies, specific companies which have value. And when you see those values, look at entering them at different coffee ranges, like Anand says, and slowly accumulate these granular stocks. And given time, 10 years, 15 years time, especially when Shashwath's generation, you will be amassing huge amounts of money, and gold will be only a small fragment of your portfolio.
Yeah, but having a small fragment of your portfolio being gold, of course, does make a lot of sense. Like we mentioned in our previous video, if you haven't watched it yet, please go back and watch that video, because we talk about the merits of having gold in your portfolio.
Yes. And
we also talk about the demerits of having gold. Check out both videos and then make an educated decision for yourself.
Yes.
So that being said, do you have anything else to say?
Very usual.
Yeah.
We are not SEBI registered anything. We just purely educational and conversational videos. If you are interested, based on our discussions, make sure you get yourself a SEBI registered investor advisor, and talk to them about your risk assessment and your investment ideas, and go according to their advice. Don't go according to our videos. We say this repeatedly. And another thing which we want to do say out there is, me, my brother and Sashwath are not out there on any media platforms asking for money, asking for donations. And if you do catch us asking for money or donations, it's not coming from us. Yeah, it's not us. We don't need any money or donations from you guys.
Yeah.
All the information we are offering you is for free, and you can consume it in all the various platforms me and Sashwath are on. We're not hiding anything. There's no secret list or secret tribe or a secret group where you have to pay money to be part of. Nor can I take money from you and make it into something and give it back to you.
Yeah.
That's not in my wheelhouse.
Please don't look at fake accounts and fall for them.
Yeah, I'm only available on Instagram and Twitter, and both those accounts are verified. They have blue ticks. Sashwath's not there on Instagram, nor is he there on Twitter. So anyone who claims to be Sashwath on any of those platforms, it's not him.
It's not.
He's only there on Substack.
Yeah.
And that link also is shared with you.
So that being said, thank you for watching this video. If you liked it, please hit the like button. If you haven't subscribed already, please hit the subscribe button. If you hit the bell icon, you'll get notified of when we upload our latest video. And finally, if you have any opinions or comments, maybe on gold or macroeconomic factors, do leave them in the comment section below. We'll make it a point to read them. Thank you again for watching us on VinodSrinivasan.
Thank you.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.